Michelle Schneider joins us now, Managing Director at Market Gauge Group. Michelle, thanks very much for joining us. Commodities are dear to the hearts of Canadian investors. So you think that commodities could have another run, a second wind, as it were?
Yes, I do. I think that, first of all, this is very typical of commodities. I am a commodities trader back from the day I was in the World Trade Center for 14 years on the Commodities Exchange. So I really got to see firsthand all of the different cycles, including the big super cycle of the late 70s, early 80s until, of course, the Volcker kibosh. And so what I know about commodities and what I know about the fundamentals right now is that a 20 to 40% move up or down, that kind of volatility is not atypical, number one. And number two is a lot of the headwinds that we have that could actually really fuel the commodities haven't really gone away. Besides the fact that obviously we still have some issues with Ukraine and Russia, even though there's been some talk now about freeing some of the grain. We still have Mother Nature issues. Obviously, heat waves could continue to impact even here in the United States. China's been relatively sleeping still because of the whole COVID situation that they continue to go on with, but they're obviously a huge devourer of commodities in general. And then we have geopolitics all over the world now, lots of different things happening with unrest, Bangladesh, Sri Lanka fighting over food. And these are the type of situations that can go out of control at any time. And of course, oil, even though it has come down a lot in price from its peak, it's holding major support. And there has been lots and lots of statements out of OPEC saying that we just really don't have the supply to meet the demand should the demand rise. So put that all together, and it seems to me like we have to keep out for that, the commodities rising once again.
That's interesting. All right. What about equities? I know it's hard to generalize, but are they in for another big rally, do you think?
Well, we've already had a very good rally off the lows.
Yes.
And so if we look at the rally sort of in tranches, right? So we kind of got through the first, we cleared the 50-day moving average in all of the indices. If you're looking at a July second half calendar range, so to speak, we've cleared that in all the indices. But now the fun begins. How far can we go in the second tranche till we get into major resistance, starting at 4,000 in the SPY and then going up to 4,200 in the SPX. That's really where I see major resistance. Now, right now we have Fed meeting next week, but the yields have gone down. And I believe that we can see commodities and equities rally to a point. But again, if commodities start to really outpace, then it could be really bad news for any sustained rally in equities. And also, one last thing, is we have to think in terms of stagflation. So just from a practical standpoint, we're not seeing obviously the recession that people were fearing, but really, where are we going to get any economic growth at this point? Obviously, earnings are really reflecting that. So we're stagnating, and that will sustain itself through a trading range that we're already seeing established here in the indices.